All right, guys. So we have 5 companies to break down this video, from Disney to PayPal, Uber, Chipotle, and of course Snapchat, which you guys probably saw. That stock got destroyed. It's not looking so good for Snapchat right now. So yeah, let's dive into it. We have a lot to go over: earnings, charts, what I'm looking to do. So smash that like button. Make sure to subscribe, and you might as well follow me on X at Stas Talk Stocks and on TikTok at Stas Surfest. All of those are down below, guys. And with that being said, cheers. Let's dive right into the video. So check it out. It's about 12:15 right now on the East Coast on this beautiful Thursday afternoon. It's really nice here in Jersey today, guys. About 45 degrees. Nice sun. You know, it's not cold. Well, I guess it's a little cold considering or depending on where you guys live, which, by the way, let me know in the comments what city you're watching this video from, what state, what country. Let me know down below in the comments. But here in Jersey in February, man, 45 degrees with some sun out, no clouds. Yeah, that's a pretty nice day. Not too bad. And again, we have a lot of movement going on right now in the stock market. Holy crap, I just realized ARM Holdings is up 58% right now. Are you kidding me, guys? I wasn't even going to talk about ARM Holdings in this video because, well, I mean, I probably should now. It's up 58%, but it wasn't originally listed on the list. But earlier it was up, I think, 20-30%. Now it's up 60%. What is going on here with ARM Holdings, guys? This is unbelievable. So they reported earnings, it looks like yesterday. Might as well just dive into this with ARM Holdings. They reported, it looks like the stock was at about $77. We got that initial pop to 108. Then we consolidated and cooled off at about, let's say, $93. And then at open today, we shot all the way to 126, took the high out from yesterday after the bell, and now we're at 121. Unfreaking believable here, guys, on ARM Holdings. So let me see exactly what they reported. I think they reported, was it yesterday or was it 2 days ago? Yeah, it was yesterday. So they did EPS, it looks like, of 29 cents adjusted, which beat the 25 cents expected. And they also beat on sales, 824 million versus 761 million expected. So double beat for ARM Holdings. And they see, let's see here, guys. They see adjusted EPS for Q4, 28 cents to 32 cents versus 21 cents expected, and revenue of 850 to 900 million versus 780 million expected. And for the full year, they see $1.20 to $1.24 of EPS adjusted versus $1.07, and revenue of 3.15 billion to 3.2 billion versus 3.05 billion. So they beat EPS, beat revenue, and their guidance is super strong, guys. And it seems like this is now getting wrapped into the AI hype, if you will. Again, it's up 60% on the day, for Pete's sake, guys, which is unbelievable. And it seems like this one did rocket out of its IPO price. And I made a video about this months ago when it initially IPO'd. You guys may or may not remember that. And this was when? A couple months ago, right? Over the summer, maybe. And I told you guys, be careful when companies typically IPO within the first couple of weeks. It's pretty volatile. We could see a sell-off until it finds its footing as a publicly traded company. And let's just say now, a couple months later, it's found its footing as a publicly traded company, guys. Yeah. So initially when I made that video, it was at like 60, 70 bucks. We did get a big sell-off to 45 bucks. That was a drop of 30-40%. And now it's up to over 120 bucks per share. So quite the turnaround here for ARM Holdings, guys. And now it's at a point where, let's be honest, a lot of people are FOMOing into it. Don't be one of those people. Well, I can't tell you what to do, guys, but be careful out there is all I'm trying to say with this one. As again, it's up, for Pete's sake, 56% on the day. So ARM Holdings is on fire. We have Disney also on fire, which, full disclosure, I own Disney. This is one of the stocks I do own. I don't own ARM Holdings, but I do own Disney, and they reported great numbers, guys. And yeah, the stock's breaking out, and this is one that I was accumulating in the 80s and the 90s on that dip. for quite some time, man. I was buying this for months, on and off, and it was beaten down for a good part of last year, and now we're starting to see a reversal on the 4-hour chart. We have a golden cross, multi-month high. So let's see what happened with Disney here, guys. They did very well. I think they did miss on revenue, though, a little bit, but they did beat on EPS. Let me see here, guys. EPS came in at $1.04. Revenue is at about $23.5 billion, which I think that missed barely. It looks like here they see full year adjusted EPS for 24 at $4.60. Looks like they see around looks like they expect free cash flow for 24 for the full year to be about $8 billion. Looks like Q1 Hulu subscribers increased by 1.2 million. They plan to target $3 billion in repurchases for the year, it looks like, or is that for the next quarter? Either way, they raised their dividend as well to 45 cents from 30 cents, which is really good news, although I'm not in this as a dividend play. Hey, why not? I'll take a little dividend as the not the Jerry on top, the cherry on top. I was going to say Jerry on top. But yeah, not bad there. It looks like core subscribers for Disney Plus came in at 111 million roughly, and they did see, I believe, a decrease in subscribers of around 1.5 million, if I'm not mistaken. I think so, right around that figure, as they are increasing the price, but the average revenue per user, guys, is up, which is good. So they are increasing the price, and people are canceling, right? But the average revenue per user is still up because they're increasing the price, which is pretty good in my opinion. Yeah, you guys can see here, average revenue per paid subscriber for Disney Plus core is $6.85 or 84 cents. Let me see here, guys. They're also acquiring a stake in Epic Games, $1.5 billion, and their new streaming service, ESPN-type streaming service, is coming out fall 2025. And Bob Iger said, which is really good, that they are looking to revamp their movies, if you will, focus on new, fresh content, not so much just remaking old content or sequels, which I think is really good, guys. Disney needs to revamp their content, their movies especially, because let's be honest, man, these movies recently, past couple of years, have not been pretty good. They've had a lot of criticism, a ton of criticism, and the dollar figures, they flopped at the box office. Let's be honest. So, yeah, Iger, the fact that he's saying that is really good news. They're reinvesting in their parks, tons of money, which is also good news. And I think he was saying by 2025 or 2026, the newer movie should be rolled out, because obviously it takes time to produce a movie, 18-month turnaround, he was saying. So, yeah, Disney crushed it, man. They crushed it. I think they're doing really well. And that's why I've been buying the stock. Well, not recently on this run-up, but I was accumulating the shares in the 80s and 90s because I think long-term, guys, this company will do well. I think it's a great turnaround story. We're not there yet where it's completely turned around, but I think at some point they will turn around. And I would not be surprised 3, 5, 10 years from now if Disney was well over $200 per share. I'm not saying it's going to happen for sure, but I would not be surprised if that did happen. So, yeah, we'll see. And I'm in it for the ride either way. So Disney, 12.4% Green Day right now, which is nuts. PayPal on the flip side, not so good, down 11%, almost 12%. So we have Disney up 12%. We have PayPal pretty much down 12%. And this is a stock that I used to own a couple of years ago, but I've been out of it for a couple of years now. And thank God that I have been out of it for a couple of years now, because again, this thing has not been doing well at all. We hit $300, and I think I sold it. Not at the peak, obviously. I'm not going to be that guy and be like, yeah, I sold at the peak and I bought at the bottom, right? I think I sold as it got down more towards 200 on the sell-off. And again, thank God I did that. Now we're at $55 per share. And they reported, let's see here, guys. They beat EPS $1.48 adjusted, which beat the $1.36 expected. Sales beat 8.03 versus 7.87 billion as well. So that's good. They beat EPS in revenue, and I believe their total payment volume also beat, or it's up like 15% year over year, which, yeah, you guys can see payment volume's up 15%. Active accounts, though, are down 2%, and their guidance wasn't that great. Let me see here what their guidance is looking like. Looks like PayPal active customer accounts in Q4 came in at 426 million. That missed the 429 million expected, and they guided for full year EPS in line with 510 in the prior year versus the analyst expectations of 554 or 553 per share. So EPS guidance is pretty soft. Net revenues they expect for Q1 to increase approximately 6.5%, which they thought it would increase. It looks like mid to single digits. So yeah, man, I think the management team at PayPal is pretty rough. The guidance is rough. Yeah, sure, they beat EPS and revenue for the last quarter, but moving forward, it is looking pretty rocky for PayPal. I mean, there's a lot of competition. We've talked about this time and time again on the platform. There's so much competition. PayPal for PayPal. It seems like at least everybody's coming and trying to at least steal their lunch, or eat their lunch. And think about it. Venmo is great. It's a great product, but there's a lot of competitors. I think Cash App is actually a better product than Venmo. The traditional PayPal business as well is not growing nearly as much as it used to. And obviously there's a lot of competition there. So for me, I'm not in PayPal, not looking to get into it. I feel like it could be a value trap, so I'm not touching that. Uber, on the flip side, is looking really good. This stock is up looks like over actually 100% over the past couple of months, which is nuts. So Uber reported recently, it looks like they did 9.9 billion of revenue, which beat the 9.76 billion. I'm assuming, or not assuming, I actually saw it earlier. I forget the exact figure though, but they did beat on EPS as well. And Q4 gross bookings were up 21% on a constant currency basis. And Q1 gross bookings came in at 37. They see Q1 gross bookings at 37 to 38.5 billion, which is above the estimates. That's great. And there's a lot of other great numbers here. It looks like Q4 monthly active platform users, 150 million for Uber. So they're growing, guys, very nicely. Looks like active drivers up 30% year over year, guys. Holy crap. So it seems like there's a lot of supply of drivers. I guess that's good for Uber, not so much for the driver themselves. I'm assuming they'd make less money with more drivers out there, less routes to be taken. But then again, the amount of active customers, it's expanding. So more people are using the platform. But yeah, I don't know. There's a lot of supply of drivers. A lot of people are using the platforms. Looks like Q4 trips are up 24% year over year, which is unbelievable. I mean, these numbers are insane for Uber. And the $1 million question is, is this all priced in? It could already be priced into the stock, but it seems like a lot of these analysts, Goldman Sachs adjusted their price target to $81. They have a buy rating. Morgan Stanley as well, it looks like. Actually, no, that's JP Morgan and Goldman Sachs. Both of them have a buy rating. They increased their price targets to the 80s. Looks like Truist Securities buy rating, price target at 77. Susquehanna buy rating, $85 price target. So a lot of these firms, a lot of these analysts think Uber could have some more juice left in the tank. So let's see how that plays out, guys. And let's see, CMG Chipotle is also up big time post earnings. This company ended up reporting. Let me see here, guys, very quickly. By the way, if you're still watching this video, smash that like button. Make sure to subscribe as well if you haven't done so already. I appreciate you all for tuning in as always. So Chipotle did adjusted EPS of 10.36, which beat the 9.75 expected. That's great. And they also beat sales 2.52 billion versus 2.49 billion expected, and they see full-year comparable restaurant sales growth in mid-single-digit range versus analyst expectations of 5%. All right, not bad, pretty much right in line there. So yeah, Chipotle crushed it, guys. Their stock's pretty overbought. I mean, a lot of these are overbought, to be honest. Well, except for PayPal. Forget about PayPal, guys, or at least I am. But look, when it comes to Chipotle, when it comes to Uber, if you're looking at all these charts in the very short term, they're all pretty overbought. Disney, super overbought. ARM Holdings, forget about it, guys. Ridiculously overbought. So if I'm not in these personally, I'm not FOMOing into them at this point. But if I'm in them, which the only one I'm in is Disney, I would just hold on. Unless you want to lock in profits, which obviously that's up to you. Go ahead, do what you got to do. But for me, guys, I'm not FOMOing into Disney or more shares of Disney right now. I'm just holding on to my position as it is a longer term hold, and I think there's a lot more room to go. So there's no need for me to sell out. Sure, maybe in the short term it sells off from here. It is what it is. But long term, couple years down the road, I feel like I would regret it if I sold my shares right now. Let's just leave it at that. So I was going to go over Snap, but we are about 15, 16 minutes in this video already. So I don't want this video to drag on too much, but let's just say Snap reported earnings and, well, Snap did what Snap always does. It seems like it sold off 20, actually no, in this case 30% after the earnings, and it does not look like it's recovering any time soon. So what do you guys think? Let me know your thoughts in the comments down below. Hit that like button. Make sure to subscribe. Like I said, I appreciate you guys as always. And don't forget to get up to 15 stocks for Moo using that link down below. Once you guys open up your account and fund it with at least $100, you get 5 stocks, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks, each up to $2,000, guys. So get on it. Use that Moo link down below, or again, go to StockSurfS.com/Moo. And with that being said, cheers. I'll catch you guys in the next video.